It's time now for movers and shakers. So let's tell you all that's buzzing at this hour, and top of mind at noon is the auto sale. So we've just, I think, got numbers from Ashok Leland as well, Sonia. Looking good mostly?
Well, yes, you know, the two pockets that I really liked this time around was the two-wheeler space and the commercial vehicle space. Both did quite well. Of course, there's the demonetization base effect from last year, because of which the growth rate looks very good. But nevertheless, the numbers have come in better than what the street was estimating. So if you look at TVS Motor, for example, it's almost a 40% growth that TVS has seen. And this time around, it's the motorcycle segment that has done very well. They have the new Apache RR as well coming out, and that will make sure that, you know, this segment sees a good amount of a boost. Apart from TVS Motor, Bajaj Auto's numbers looked good. Three-wheeler sales were the highest ever. The domestic market is seeing a pickup as well, and the management indicated that they are well on track to achieve that 4 million units of sales by the end of FY18. So they're on track to meet their annual guidance. Looking good in the commercial vehicle space as well. Tata Motors and Ashok Leland have reported solid growth this time around. You know, no point talking about the growth rates because, as I mentioned, they look very elevated because of the base year. But these figures of 60,000 units that Tata Motors has reported and Ashok Leland's 19,000 units is an average run rate, which is much better than what they've seen in the past few months. It is a medium and heavy commercial segment, the tipper segment, which has done very well this time, and that's what's reflective in the overall numbers. The only disappointment this time has come in from Eicher Motors. You can't really call it a disappointment. Eicher Motors Royal Enfield didn't get impacted by demonetization last year, so the growth rate of 17% looks less compared to the other companies. But still, that figure that they've clocked in this time around of 66,000, it's lesser than the average that they've done for the past few months. So that's where a bit of a niggling worry comes in on the growth slowing down. The other pocket that has looked good, just to summarize, is Mahindra and Mahindra's tractor segment. Good 30% growth seen in tractors, and the management commentary was very strong. They say that the sowing season has gone, has gone down quite well. Farm incomes have increased, and they expect the growth in tractors to continue. So all in all, December has surprisingly been a very good month for the auto industry.
Okay, all right, Sonia. Well, we spoke to the management of Bajaj Auto earlier today. Let's hear out what they had to tell us.
This quarter has been really great for the three-wheelers, both domestic and exports. We have done almost about 180% growth in domestic and 200% growth in exports. And going forwards, like you said, this type of growth rate will sustain at least for the next 4-5 months, we hope, because as you know, the Maharashtra permits will sustain it for some more months.
Okay, just till last month, in fact, Naveen was tracking the auto sales, but this month he wants to do something different. It seems he is tracking the crude price moves and what kind of an impact it can have on listed stocks. Naveen, educate us on this one now.
So Nigel, as you clearly pointed out, crude prices have been surging above that $67 mark is what the Brent crude is trading, and doesn't seem to be any downside for this given the fact that the weak dollar as well as the lower production from US. Now, how does this impact listed companies, especially the OMCs? I would suggest today that in the morning we spoke to HPCL, wherein they alluded to the fact that the increase in crude prices is not the only factor to increase the fuel prices. Mr. Surana clearly told us that apart from this, we also need to factor in the consumer sentiment and their acceptance for the higher crude oil prices in their fuel bills. So that is also one key point. Maybe that is one reason which started the sentiment, and we saw a sharp tick in all the OMCs, including HPCL, BPCL, etc. On the other hand, talking about LPG prices, remember recently there was a report that the government may withdraw the periodic hike in the LPG prices. But Mr. Surana also told us that this won't clearly impact the company because the under-recoveries in LPG is clearly funded by the government itself. Now let's listen into what the management had to say of HPCL.
The subsidized LPG and the PDS kerosene. On these are the two which are controlled products right now, and on that, whatever is the under-recovery is being reimbursed by the government. And we are guided by the directions of the government on this pricing of these two products. So as such, whether the price of the domestic LPG cylinder is hiked or not hiked, it does not affect the companies as such.
And NLC India is doing well in trade, actually up about 3.5% right now on very, very high volumes. They've received some financial aid. Anisha, what more can you tell us?
Well, yes, NLC India is buzzing in trade, that after the company has achieved financial closure for the UP power plant. Now, remember, this is a 1980 megawatt plant that they're building up along with UP Discom. They own around 51% stake, while the balance is owned by the UP Discom. Now, the company is getting 11,000 odd crores from a consortium of PFC, REC and SBI. And the management told us that the rates are very competitive when it comes to cost of borrowing. And it can be below the 8% mark as well. The project is already under construction and is expected to complete by 2021, and then is when the company is expecting significant bump up when it comes to the top line and the bottom line, because remember, the PPA for this plant has already been signed. They're expecting a rate of around 4 per unit, which is really healthy. Other than that, the management mentioned that they are looking at stressed assets worth 3,000 megawatt for acquisition, including the GMR Chhattisgarh plant, the due diligence for which has been underway. It has been a bit delayed. They are talking to Tanjanko to get a PPA for that, but that one is under the scanner as well. Let's hear out the management on what they have to say regarding this particular project.
The pattern finance actually it is a 1980 megawatt that will be adding. So at a tariff of something around 4 rupees, it's quite substantial impact will be there. But as I told, we are 51% equity holders, so also 49% is by UP. So naturally, the profit will be shared in the form of dividend by both the partners. For GMR, our part valuation is over and we are in talks. But only thing is, somebody should buy power, and at what rate? That basically, without that, buying an asset will not be really helpful for us. Tanjatco, which assured us to buy the entire power, now we are discussing about the rate. They are expecting somewhere around 3 rupee 10 paisa ex-bus from that place, which we find it will be really difficult.
Okay, some flashes for you. The amendments to the Insolvency and Bankruptcy Code regulations were notified last evening. And in terms of the important changes, Ritu Singh tells us that there is a resolution plan to identify source of funds to pay liquidation value to dissenting creditors, not necessary to disclose liquidation value in information memorandum. As per the amendment, also the IRP would be to provide liquidation value in confidence to the Committee of Creditors. We'll have Ritu joining us in just a bit to try and shed some more light on this. These changes, we understand now, will have come into force from the 1st of January. Amongst others, we have news that dissenting creditors would be assured of liquidation value at least. So we'll track this story with Ritu in just a bit. But for the moment, we also want to focus on NMDC. Nigel, it appears that there could be a price hike in the offing.
Absolutely, Sumera. We alerted our viewers in the morning itself that keep an eye out on this stock because there could be a price hike. Now, the scene is set for a price hike, and just looking at the way the stock is moving, a price hike is factored in. Now, it's a question about how much of a price hike can come about. To tell you why, in fact, everyone is anticipating a price hike, there are various miners in Odisha that will, that had to pay a particular penalty. Some of those miners, some of those larger miners like Mesco and Sirajuddin, this report suggests that they couldn't come up with the money. This is what reports have suggested. So if that's the case, then close to around 15 to around 20 million tons goes out of the system. Remember, India produces roughly around 180, 190 million tons approximately. Out of that, close to around 100 million tons comes in from Odisha itself. So, if 15 to 20 million tons goes out of the window, then in fact, there'll be a bit of a shortage. And that's why the street is factoring in a price increase. Not just that, in the last week of December, private miners, they went ahead and they've increased prices by roughly around 300, 400 rupees, very, very approximately. So the street is factoring in at least a 300 rupee price increase. Remember, in the month of December, they increased prices by 10 to around 13%, that is NMDC. So now, in fact, the street is saying they can build on that price increase, and that's what will help them. Demand for fines has improved as well because of pellets. My only fear, Sumera, is that in fact, the street is factoring in this this best case scenario. What if some of those mines reopen, or some of those miners that are expected to shut down, if they can come up with the money to pay the penalty, then they'll reopen, which will not be very good news. But for the time being, if the stock is on fire, it's up, virtually moving to the 52-week high of around 150, 155.
All right, let's get back to that story which is being flashed for you at the bottom of your screen. Amendments to the Insolvency and Bankruptcy Code regulations were notified last evening, and Ritu Singh is joining in to tell us what the key changes are. Ritu.
So, Mara, some very important amendments have been made to the Insolvency and Bankruptcy Code, and these were notified late last evening by the Insolvency and Bankruptcy Board of India. I'll start with the most important change that they've brought about, and this is really something that the bankers have been chasing at the IBBI to make this particular change. The most important one, that is the disclosure of the liquidation value of an asset. Now, according to the previous IBC rules, which were in existence before the 1st of January, the liquidation value of an asset had to be disclosed in the information memorandum that was provided not just to the Committee of Creditors, but also to any buyer that was evaluating these assets. And the bankers had been complaining that that distressed the value of the bids that were coming in, and that any potential buyer would mark their bids very close to the liquidation value. So there wasn't much to gain for the bankers per se. And now with this important change, IBC says that the liquidation value will not be printed on the information memorandum. It will be disclosed to the Committee of Creditors by the insolvency professional in confidence, and will not be used by any member to gain any advantage in terms of pricing. So therefore, this is the one biggest change that the IBC amendments have brought about. The second one is that if you're a dissenting creditor in a committee, that is approving a particular resolution plan, the dissenting creditor will be approved of at least the liquidation value of that asset, which means, even if the company is not going into liquidation, the value that is due to that creditor will be given to him, and therefore the source for those kind of funds will have to be identified in the resolution plan that is prepared by the Committee of Creditors. There's one little highlight, so to say, not really a change, where resolution professionals have to give invitations and submit resolution plans strictly within timelines without further extensions, and that isn't necessarily a big change, but the two that I highlighted earlier are very important and very welcome, at least by the bankers.
Ritu, definitely comes as a shot in the arm for a lot of these banks.
Fiberweb is the other stock that we're discussing now. The stock, remember, has doubled in the past year. To discuss what's going on, we have with us Mr. Praveen Seth, the CMD of the company, who joins in. Hi, Mr. Seth. Thanks so much, sir, for joining in. Well, we're aware, sir, that, primarily you were into spun-bound yarn. Now you've included a couple of new products, lights of melt-blown yarn as well as a flat-bound yarn. So those are your value-added products that you've added.
Yes.
We don't have enough time to understand these products, but what can it bring in terms of revenue, sir? At the half-year mark, you've already done around 115 crores. But for FY19, what should your revenue number look like?
For FY19, we are expecting the revenue numbers like about 500 crores.
100 crores. So you're saying, I think earlier...
Sorry, not FY20. FY19 will be approximately 400 crores.
400 crores. And last time you joined us, you told us that you'll end FY18 with 300 crores. So 300 crores will see another 30% increase in FY19 is what you're saying.
Yes, please.
Okay.
So what about the contribution from this meltdown yarn unit? I think it came on stream in December. Could there be anything substantial in FY18? By when would it become a substantial part of your top line?
See, this has started, we have started selling from the last month. And that means we'll get about 4 months for FY18. And the profitability of this particular melt-blown is excellent, much better than even the spun-bound. I think EBITDA margin, if you see, the EBITDA margin is about 28% against 18% in spun-bound.
Okay.
So that will improve the profitability fantastically.
Okay. So then let's focus on your margins. If you're saying that your melt blown, that's better than what you're doing currently, which is spun bound yarn, right? So 18%, melt blown gives you around 28%, and flat blown will give you even better, correct? That's 35-40%?
EBITDA margin of about 40%.
Even better. Okay, so let's lay the graph down then for our viewers. This year you're saying you're going to do 300 crores, next year 400 crores. In margins, how does it improve? At the half year mark, you were doing around 15%. So how do your margins improve? Can we see it go to around 20%? Can it go more than that?
Yeah, approximately 20% this 18 ending.
Okay.
And it's likely to be quite high so far as the 18-19 is concerned, because we'll get a full year of meltdown.
Okay.
As such, the margin, the margin will be much higher. In fact, it will. We are expecting it to be approximately 25 to 26% overall.
Okay. Mr. Shea, this flat-bound yarn facility, I think you'll be setting it up only sometime next year. Is there any sort of capex requirement for it, and how are you looking to fund it?
Yeah, about 125 crores is the capex, and we have already finalized the machine, and we are likely to place the order this month.
Okay, 150 crores. How do you fund it, sir?
125 crores. Out of that, 50 crores we are getting a loan from the machinery supplier. So that will take care of 50 crores. Then 50 crores we are trying to raise the equity by the preferential issue, out of which we will be taking a good amount of equity as the promoters. And the balance will be out of internal accrual. 25 crores will be out of internal accrual.
Okay.
You know, Mr. Seth, I'm not able to understand one thing. You're saying again you're going to dilute the equity base. If I take a look at it, in April 2017, you had around 59%, correct? In terms of shareholding, promoter held 59%?
Yes.
Now, if I look at it as of September 2017, it's come down to around 49%. And I'm just looking at some disclosures. It appears there is some selling from the promoter's point of view.
Actually, I'll tell you, as a promoter is only Sheth family, who have not sold any shares.
So who has sold then, sir?
Actually, the strategic investor.
Okay, strategic investor.
Yeah, he has sold, but now he has also promised that he will not be selling in view of the fantastic progress of the company. And because he needed some funds, that's why he sold some shares. But he has promised that he will not be selling any shares now onwards.
Says who is the strategic investor? I can see there's a Gayatri Pipes who has 12%. Who is this, this seller, sir? If you could help us out.
Sellers were Gayatri Pipe and Agarwal family. Agarwal family was also part of this.
Yeah. So currently, what is the promoter holding then? Because you're talking about another preference issue. I think it had come down to around 49%. As of now, what does it stand at?
Our share, this thing is about 41%.
41% it's come down
to?
Yeah,
our own, no, not come down.
Okay.
It has remained 49% overall with the others.
Okay.
But with my own family, this thing is 41%.
But
and we were to keep the same thing. We are also going to subscribe. My son, who is in the USA,
he will also subscribe.
Taking over from the April, and he is investing around 15 crores out of the 50 crores which we are going to go in the market.
So short point is that your promoter holding will not fall.
Promoter holding will not change. It will remain to be about 41%.
Will not fall from these levels of 49%.
No.
Okay, great. So one final question from my end. Everything is looking so good. You're going to do 300 crores. You're going to do 400 crores. Your margins are going to improve. Can shareholders expect a bigger dividend? I think first time you have given some dividend of 50 paise in the last month.
See, we have given the bonus share for 1:1. And this is just an interim dividend of 50 paisa. Just to, shareholders were feeling that we don't want to wait till the final dividend and all that. So, and second thing, we are also expanding. So we thought that for the time being, it is better to conserve the resources rather than giving the, very generous dividend. But in future years, we'll be definitely very generous in giving dividends once this expansion plan is already taken place.
All right, sir, thanks very much, not just for your candid responses, but I think also on behalf of the shareholders to know that there is a larger dividend that's in store. So that's the management of Fiberweb India, extremely bullish on their business, expecting a bump up not just in FY18 top line, but going forward into FY19 as well, with the key being the operational improvement and the improvement in profitability that they will see.